What's up everyone, it's Kadi with MoneyVest. So in this video, we are back at it once again with Magnificent 7 and big tech companies here and what the heck is going on with their concentration, so much so that they're now bigger weighting in certain indexes with respect to certain countries in those ETFs and indexes as well. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. I would really appreciate that. And of course, links to our Discord and Patreon is going to be down below. We've opened up a few more spots with that 16% annual discount that's available until the end of this month. So until the end of December, you can access all the members only private videos, over 40 plus tutorials and lectures. I posted a brand new video over the weekend going over how and why I'm investing in this one particular area in the market going into 2024, investing very heavily in this area. And of course, you can access all the Excel spreadsheets, including my watch list and my fair values and buy and sell alerts on the Discord, including options alerts. And I shared a couple of trade ideas for 2024 as well today. So again, all of that is going to be available and accessible with the link down below. And definitely do connect with me on Instagram. My handle is going to be CASWRP. I do post a lot of portfolio updates and posts and stories over on Instagram as well. So this right here is, again, the performance of the Magnificent 7. We're talking, of course, your Metas and your Googles and your Apples and Microsofts and Nvidia and Tesla, the big tech, the large cap tech, as we already know. And they're up close to 80% combined on a year-to-date basis compared to the S&P 500, which is up a little bit over 20%. And the other 493 companies are up a mere 15 to 16%. Year-to-date basis. So you can see the significant amount of dislocation that's happened, not to mention that we have seen, of course, the valuations expand. 2022 was not the best year for big tech, and that's one of the reasons why it was not very sort of appreciated trade. And we talked about how it's absolutely insane. I still remember October of 2021 going into 2022. I remember talking about how it was getting pretty insane with the low valuations. I mean, Google's and Meta's were trading at really, really cheap valuations. And of course, a lot of that has now resulted in an explosion in the overall rally. And of course, valuation and market multiples have expanded for these companies, and they've had one of the best years so far. It's the Magnificent Seven's market. The other stocks are just living in it. So basically, it's the world of Magnificent Seven. The other stocks are basically just living in their world, and you can see the combined share of the largest 7 companies in the S&P 500 is now approaching 30%, which is the highest on record we've seen for such concentration. The Magnificent 7 stocks have now swelled up to represent about 30% of the S&P 500's market value, according to Goldman Sachs, and that is approaching highest ever share of any 7 stocks as well. And it's mind-blowing, the number, it's basically mind-blowing number to me when I think about an index that's supposed to represent such a broad group of companies. This is Ann Milletti, head of active equity at Allspring Global Investments, and of course the wide outperformance gap that we've seen from these 7 stocks as well. And this right here, this is the chart that actually says it all. This is even more mind-boggling to think about, because this is the MSCI All Country World Index. This is literally the world index that encompasses 85% of all investable equities in the world. And we're talking about these 7 stocks now making up more in terms of weight, index weight, than the United Kingdom, China, France, and Japan stocks combined. This is absolutely mind-blowing for this particular ETF. So the influence of big tech is so massive on a global scale too, within the MSCI All Country World Index, a benchmark that claims to cover about 85% of the global investable equity market. The combined weighting of these Magnificent 7 is larger than all of these stocks from Japan, France, China, and the UK. Combined, investors and strategists have long raised concerns about the market concentration. With just a handful of stocks are responsible for most of the market gains, it becomes more vulnerable to a downturn if the heavyweights start falling as well. And of course, those worries appear to be persistent. Last year, when big tech stocks tumbled as the Federal Reserve was obviously raising interest rates and rates were near zero, investors chased those robust returns offered by tech and other growth stocks. But when rates started rising, those shares suddenly faced competition from less risky investments. And of course, the Magnificent 7 finished down 40% in 2022, and the other 493 stocks were only down 12%. So once again, you see that dislocation both on the downside and on the upside as well, because in 2022, we know the Mag 7 kind of underperformed a lot of the other stocks. They were down more than other stocks. And this year, they're actually up more than other stocks as well. So it kind of works both ways because of the volatility that they carry and because of the significant amount of concentration in these 7 companies. Now this right here is the percentage of stocks within 10% of their record highs. And even though the S&P 500, as you'll notice, is only 1.6% from all-time highs from its January 2022 record, only 23% of stocks in the index are within 10% of their record highs, according to the Dow Jones market data, and that is below the historical average of 28%, meaning a very small percentage of companies are actually trading within 10% of their all-time highs. And of course, Magnificent Seven have performed really well, and that's one of the reasons why the markets are almost back up to all-time highs and less than 2% away from all-time highs. NASDAQ 100 already at an all-time high, the Dow Jones already at an all-time high. The NASDAQ composite, though, is still less than 9 to 10% from its all-time high, so we still have a little bit more ways to go. However, one more thing I want to point out that I think is very interesting. This is the weekly net flows into US-based tech, mutual, and exchange traded funds. And what you'll notice is that this right here is the last few weeks of December. And of course, we did see 3 consistent weeks of rising inflows, net inflows in the billions of dollars into US-based technology, mutual funds, and exchange traded funds. But look at this right here. This is the big bar coming in towards last week. And this was the biggest net outflow of technology. So in my opinion, I think this technology trade is certainly getting very, very overcrowded. Can it go higher? Yes, absolutely. I mean, this is where one needs to be, in my opinion. We've been covering technology for well over 3 years. The channel's been very much focused on tech, big tech, large cap growth, and of course, growth companies in general. So yes, they've seen a significant amount of outperformance this year, but it's also getting very overcrowded, something that we cannot ignore based on multiples, valuations, and technicals, right? And this outflow definitely does suggest that investors are de-risking a little bit of technology and moving more towards small caps, in my opinion. Biotech performed really well last week. Even the bond market is now starting to move up very, very nicely. TMF, TLT, as we've already discussed in our previous videos. And solar, renewable energy and solar, which has been really suppressed, depressed this year. I mean, Enphase is down over 40-50% this year. It's underperformed significantly. So the money is now starting to rotate, in my opinion, a little bit out of tech over to other parts of the market. And this definitely does suggest that with that weekly outflow, the biggest outflow we've seen in 2023. And this is, on the back of this higher concentration that we've seen, and of course, a significant amount of concentration, 30% weighting of the S&P 500. So average price to earnings ratio for S&P stocks in the next 12 months. This is forward PE multiples. And you'll notice that we have actually come down from Magnificent 7, well over 40 down to now 34 to 35. Still pretty elevated compared to the other 493 companies, which is just a little bit over 20. So again, if you take that average, we're looking at just over 22, 23, because a lot of the companies, 493 companies, are sitting closer to 20s versus only 7 that are sitting at a little bit over 34, 35. So when you average those out, we're closer to 21, 22. But I'm sure if you take a weighted average, 30% at 35 versus 70% at closer to 20, you're going to be closer to 30 price earnings multiple as opposed to the 20 that we're currently in for the S&P 500. So that's where we are at the moment for the overall market. And, as we have already discussed, this index in particular that we have created for our Magnificent 7 that we're keeping track of. So it's going to be this index over here. This actually does include for other companies as well. And you'll notice that it's almost at an all-time high. We saw a very nice breakout to the upside. We were kind of talking about this bull flag for this particular index. So this right here was a very nice pull, a little bit of that consolidation and going sideways, and then a breakout. And now we're consolidating sideways once again at 1945. So you got a huge resistance sitting right there. That's where the index is kind of coming up to. If you do get a breakout, like I said, can technology go higher? Absolutely. I mean, Apple can continue to hit new all-time highs. Tesla can continue to move higher. AMD and Nvidia have been on a massive rally themselves. And of course, Amazon, Microsoft is at an all-time high. Google is also consolidating sideways, but it has the potential to get up to all-time highs. So a lot of these technology companies, because of the momentum, because of the seasonality from December, because of a lot of sentiment that's very positive around these companies, can they go higher? Yes, absolutely. But it's just an idea around the marginal upside versus the marginal downside. For me personally, I do own a lot of these companies in both broad-based ETFs and index funds, and of course individually as well. So am I going to be starting to sell? Not really. What I will be doing though is selling some calls against my shares at out-of-the-money calls, maybe 20-30% higher out of the money calls that I think I'm going to be comfortable collecting some premiums. And if I do end up trimming a little bit and de-risking a little bit, I'm totally fine with that as well. And that's going to be the plan moving forward. So I'm not going to be actively straight up selling because of the concentration or the risk associated with that concentration or the fact that they're overbought or the multiples have expanded. No, because the markets can continue to be overbought or overvalued longer than you can remain solvent. So I think that can persist for a longer time, but I will be taking advantage of these opportunities to sell some calls. I sent out some updates in the Discord today for Amazon, for Tesla, for Enphase, for AMD. So we'll be looking at selling some calls for those companies to collect some premiums along the way over the next month, maybe 2 months. And of course, that's going to act as a hedge for that potential pullback or a dip that I do expect will take place very soon because the markets can't keep going up forever. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below. It's been absolutely an incredible year. I'm sure it's been an amazing year for you as well. A lot of our members in the Discord have been sharing a lot of updates, a lot of their stories. So it's really, really touching. It's very amazing to hear all these amazing gains and profits and stories that we've had in 2023. So I'm genuinely happy for each and every one of you. Share your stories down in the comments or in the Discord. Definitely do check that out. Link below if you want to join. Of course, connect with me on Instagram and also join our Patreon and our Discord. 16% annual discount that's available till the end of December. Link's going to be down below. And as always, happy investing, and I will see you all in the next video. Take care.